So you heard those Jamie Dimon comments, some very strong words from him. What was your reaction?
So he's right, though. The Fed is probably have to move a little further from here than what they projected. You know, this number that comes out today, the core PCE, that will show some change now in not only that services remain strong, right? There's a demand for services, but also that goods inflation has been declining over the past year. That seems to be somewhat reversing. So they have to stay the course, probably going to this rate that Bollard talked about the other day with Steve Leisman, right, at least, to try to get this inflation not only under control, but to be sure that you get back to 2%.
So is PCE, CPI, inflation rates, are those still market movers? Because we just got the Fed minutes. They said they're going to do ongoing rate hikes. They didn't say anything about a pause or a pivot, even though people keep hearing it somehow between the lines. So do you see this report coming up later today as a market mover?
It could be, because people are looking at two things there. They're looking at that super core inflation, that's services minus housing, and that's what Powell has been talking about so much. That moves up to more than expected. Then people are going to take it from it, okay, Fed, you not only have to go further what Bollard says, maybe even more than that. And secondly, that people look at anything that was deflating in that basket is reversing to a different direction. So yes, it could be market moving.
All right, something we'll have to watch. So we've had what I'm going to call an interesting start to 2023 in this first quarter. Big rally in January, a very soft February. What are you expecting for this last month of the quarter?
So it continued to be a bit of a struggle, right? You actually boxed in a range in the S&P between 3,800 and 4,100. And although that volatility in that range is low, there's a lot of signals in the earnings that are very mixed. So I think you cannot expect to see a major bounce from here, especially as the bond market is completely reassessed where the Fed is going. And that I think is overhanging the equity market.
All right, so you're leading me to my next question. You put out a note just recently. You're watching the bond market and the parallel shift with treasuries. Explain to the audience what that parallel shift is and why it's important for both bond investors and equity investors.
Yeah, it's an interesting shift in the sense of, you normally talk about a steepening of the yield curve or a flattening. When the yield curve goes up all at the same time, all rates, so 2, 5, 10, 30-year yields, that really is pricing in a Fed that's going to have to be not only tightening, but perhaps over-tightening, doing more than what's needed. And that transmits then into the economy, so the yield curve then starts parallel shifting. This actually happened in the 1970s too. We had high inflation. Bond markets assessed this is inflation is not going to go away that quickly, so it needs more monetary tightening. That's what parallel shift is.